You may not be familiar with value investing, but by the end of this show, you will be. Value investing is a strategy used by legendary investor Warren Buffett, also known as the Oracle of Omaha. He was introduced to it by his teacher at Columbia Business School, Benjamin Graham, author of The Intelligent Investor. Today, we'll share that knowledge with you.
Billionaire Warren Buffett is known as the most famous value investor today. Benjamin Graham, known as the father of value investing and author of The Intelligent Investor, was one of Buffett's teachers at Columbia Business School. But let's back up here. What exactly is value investing? It's an investment strategy that involves picking stocks that appear to be trading for less than their intrinsic or book value. This involves picking stocks that are priced lower than what you believe they are worth, stocks that are undervalued by the market. So, investors hope to capitalize on buying an undervalued stock low in order to profit when it rises. But how do you measure what stocks are undervalued? There are several ways. Here are a few. Price to book, or PB, measures the value of a company's assets compared to the stock price. If the stock is lower than the value of the assets, the stock is undervalued. Price to earnings, or PE, shows the company's record for earnings to determine if the stock price is not reflecting all of the earnings or is undervalued. And there's also free cash flow, the cash generated from a company's revenue or operations after costs of expenditures have been subtracted. Overall, value investing is about the long-term game. It's not about chasing trends or timing the market. It's about recognizing the worth of companies and waiting to buy them at a discount in order to eventually, hopefully, profit when the market catches up. Berkshire Hathaway is now the 9th largest company in the world by market cap at just over $1 trillion. It was originally founded in 1839 as a textile manufacturing firm. It later merged with other companies to become Berkshire Hathaway as we know it today. Warren Buffett began buying shares in 1962 and took over in 1965. There are two share classes of Berkshire Hathaway. Class A, introduced in 1996. The shares Buffett originally owned were converted to this class. They are currently priced at more than $700,000 per share, thus creating the need for a more affordable version, the Class B shares. Buffett is the 9th richest person alive, according to Bloomberg's Billionaires Index. He has a net worth of $150 billion, trailing other big tech CEOs like Elon Musk, Mark Zuckerberg, and Jeff Bezos. The majority of Buffett's wealth comes from his 37% stake in Berkshire Hathaway. That shakes out to over 207,000 shares of Class A and B, worth around $148 billion combined. He also has $1.7 billion in cash and other assets, and in 2025 alone, Buffett's net worth has grown by $8 billion. In his 2024 annual letter to shareholders, Warren Buffett defended Berkshire Hathaway's growing cash pile and also reflected on mistakes made around the economics of different businesses. Buffett said the company did better than he expected, but our next guest says Buffett's musings and that $334 billion cash position is bearish for Buffett.